All right, let's talk Consolidated Water, ticker CWCO, because wow, their Q3 earnings were something else. We're not just talking a solid quarter here. This was the kind of report that really gets Wall Street's attention, sending the stock absolutely flying.
So here's how we're going to break this down. First, the big earnings beat. Then, we'll get into the actual numbers. After that, we'll look at the bigger growth story here. And finally, we'll give you our take, the next call, on what this all means. And of course, we'll wrap up with the usual disclaimer.
All right, let's get right into it. Consolidated Water just crushed their Q3 earnings. And the market, well, it loved it. The stock shot up 7.7% on some seriously heavy volume. We're talking 2, maybe 3 times the usual. It even hit a new 52-week high. Talk about setting a bullish tone.
So what caused that pop? Let's dig into the numbers, right? These are the headline figures that really got everyone excited.
Okay, first things first, earnings per share. CWCO delivered a GAAP EPS of 34 cents. Now, the Wall Street consensus was just 24 cents. You do the math, that's a massive 42% beat. Just a huge surprise to the upside.
And it wasn't just about the profits, The top line was strong too. Revenue hit $35.1 million, which was over $2 million more than expected. That's a solid 7% beat. It just shows you the strength was all across the board.
And you know what else? Management put their money where their mouth is. They boosted the dividend to 14 cents a share. That is a 27% jump from last year. That's a huge signal of confidence, right? It tells you they feel really good about their cash flow and what's coming down the pike. But here's what really caught my eye when you look at the year-over-year numbers. Yeah, the EPS and revenue growth are nice, but the gross margin, that's the real story. It expanded by 200 basis points. That's a full 2 percentage points, all the way up to 37%. Getting more profitable as you get bigger, that's exactly what you want to see.
So, great numbers, right? But what's actually driving this? Because this isn't some lucky break. This is all part of a very smart, diversified strategy that's really starting to pay off and setting them up for some serious growth.
And you can see that strategy right here in the revenue breakdown. Their services segment is the big dog this quarter, bringing in 41% of the revenue. But look, their older bulk and retail segments are still pulling their weight, and that manufacturing piece is growing too. This mix is key. It gives them stability, but also a bunch of different ways to grow in the future.
Okay, let's talk catalysts. First up is the Monster project, the big one in Hawaii. I mean, this thing is huge. The design for this massive desalination plant is 100% done. The only thing left is one final permit, what they're calling the key gating item. They're looking to break ground early next year. And once this thing is up and running in 2026, 2027, we're talking about a serious material impact on revenue. Everybody is watching this one.
But hey, it's not just a one-trick pony with Hawaii. Catalyst number 2 is the steady drumbeat of new project wins right here in the U.S. Just in Q3, they locked down another $15.6 million in new contracts, a wastewater plant in the San Francisco Bay Area, a drinking water plant in Colorado. The point is, they're building up a really solid backlog that gives them clear line of sight into their 2026 revenue, even without Hawaii.
And catalyst number 3, a really smart move down in Florida. They just finished expanding their manufacturing plant, and the timing, it's just perfect. See, regulators in Florida are basically telling utilities they need to get better at treating salty water. And guess who builds the advanced, high-margin systems to do that? Yep. With this bigger facility, CWCO is poised to grab a whole bunch of that new business.
Okay, so you've got a fantastic quarter in the bag. You've got multiple growth engines firing on all cylinders. So what does it all mean? Let's put it all together and give you our forward-looking view. It's time for the next call.
So this brings us to the big question, right? The stock has had a great run. Where does it go from here?
After looking at everything, the fundamentals, that clear pipeline of growth, we're putting an outperform rating on the stock.
And here's why, broken down for you. In the short term, you're going to see steady, solid earnings from their main business, while those new U.S. contracts keep beefing up the backlog. Now, the big thing to watch for is any news on that Hawaii permit. That's the next event that could really move the stock. But the real prize, the long-term story, is that huge inflection point coming in 2026 and 2027. That's when all these big projects start hitting the bottom line.
So if you're thinking about how to play this, here's an idea for you. You could look at some long-dated call options. We're talking ones that expire out past that 2026 revenue jump. It's a way to potentially use some leverage to capture that upside when that Hawaii money really starts to flow.
Okay, and before we sign off, just the quick, important disclaimer.
Remember, none of this is financial advice.
We're just providing this analysis for informational purposes. You've always got to do your own homework and talk to a pro before making any investment decisions.